Your mortgage guy Brian here, and today in this video I want to look at something called cash at close. This is a part of every purchase transaction, and it's something a lot of my borrowers, when they're buying their first home, don't quite understand. I just had a meeting the other night with a borrower who said, I want to buy a home at $200,000 and I want to put 10% down. I've got my $20,000 in savings, I'm ready to go. I asked them, hey, there's going to be some other additional costs. Are you okay with that? Do you have some more saved up for that? They said, no, I saved my $20,000 down payment. That should be good, right? So that really made me understand that I needed to go over the components of cash at close. It's not just your down payment. There are actually 3 components that make up the money you need to bring to the closing table. Now, as a small aside, some of these things will be paid for before you get to the closing table in the form of, say, earnest money. And some of these things might actually be credited back to you in the form of a lender credit or a seller credit. So that final cash at close number is not always 100% guaranteed until you get to that closing table and you get what's called a final closing disclosure. That's when you're going to know exactly what you need to bring to the closing table. So let's talk about the first part, your down payment. This is probably the one most people are familiar with. This is the amount of money you are going to put towards the purchase price of the property, and then you're going to finance the rest of it. So for example, I had some borrowers who were buying a home for $270,000. They were first-time home buyers, so they went with a 3% down payment. That's a down payment of $8,100. That means they were financing $261,900 of that purchase price. So that down payment, some of it was given in earnest ahead of time, and the rest is going to be given at the closing table. Now let's look at the other 2 components. These are the ones that people are not as familiar with and where I want to spend most of my time, right? So the first one is fees that are associated with purchasing the property. There are different types of fees. The biggest one is going to be your title fees. Now, as a buyer, you unfortunately, in the state of Illinois, have no control over that title company. The seller actually gets to pick their title company. So in my client's situation, the title company was picked and their title fees were about $3,300. That's pretty standard. One thing I would always recommend you do whenever you go to buy a home is have your loan officer go and run a title fee estimator so that you can get an idea of what those title fees are going to look at. Another fee that you're going to have is called an origination fee. So this is going to be the mortgage lender, right? The mortgage broker's fees. So in this example, that was $1,900. This was things like originating the file, the appraisal, and some other like credit checks and things like that. The final common fee that you're going to have to bring to closing is called your government fees. These are going to be your recording fees, your transfer stamps, your water bill in some municipalities. It's really going to depend on where you're buying that these government fees are going to, change and vary. So in my borrower's case, they had about $3,300 in title fees, $1,900 in origination fees, which included the appraisal, and $196 in government fees. They only had the recording of title that they had to pay for. The final category, and this is one that a lot of people don't even think about, but it is one of the things you need to bring to closing, is your prepaids and escrow fees. Now, if you do not escrow your taxes and insurance, what that means is you're going to pay for your property taxes, you're going to pay for your homeowner's insurance on your own. First-time home buyers, I really recommend setting up an escrow because it gets rid of the panic of getting your property tax bill and saying, oh my gosh, how am I going to pay this? If you want more explanation of how an escrow works, I have a video on that. I would highly recommend you checking it out. So, what are your prepaids and escrow fees on a purchase? Your prepaid, your biggest prepaid is going to be your daily interest. So let's say you close in the middle of July. You're not actually going to start that loan until the beginning of August, which means, I had to do a little bit of math there, which means that you are only going to be paying interest from the end of July to the beginning of August when you make that first payment. So you get charged the amount of interest that you would have over those days. So in my client's case, they paid about $1,000 in interest. The other prepaid is going to be your homeowner's insurance. At least here in the state of Illinois, you are required to be covered for at least a calendar year with homeowner's insurance. So you need to pay for that first year up front. So that can be done at closing, which my clients elected to do, or some people will make that payment ahead of time, go to their insurance agent and say, hey, let's put it on my credit card, let's make the payment, give me the receipt, and you won't have to bring that to the closing table. The other part of prepaids and escrow is your actual escrow account. So you always are going to want to have some kind of buffer in your escrow account, and your lender will set this up for you, where you make payments every month, and if at the end of the year your taxes go up, which a lot of the times they do, or your insurance policy premium goes up, which it can do, you have some room in there. So my clients had set up their escrow. They had 2 months of homeowners insurance in there, and then they had about 6 months of property taxes so that they would be ready for that first property tax payment. Again, these amounts are going to change depending on when taxes are due in the place that you're going to be living and what time of the year you are actually closing. So all in all, if you take all of my borrowers' fees, the down payment, they had to bring a total of $17,000 to the closing table. Now, my clients were fortunate enough to get a seller credit to offset some of those, but again, you won't know about that always up front. So it's always good to be pre-approved with the highest amount that you might need to bring to the closing table. It's always good to know, hey, if I have to bring this much, I have this much saved, and if I have a great realtor who's going to help me get a lender credit or a seller credit, well then that is less that I need to bring. There's also, if we're going to get really involved, there's property tax credits that you will most likely get at the closing table, so that number might even be reduced more. So I went over a lot of information here, but I just want to recap it really quickly. What do you need to bring to the closing table? It's going to be your down payment. That's the one we all were familiar with. It's going to be your fees, your closing costs. That's going to be things like title fees, origination fees, and government fees. And finally, you're going to have your prepaid interest and your prepaid insurance and your escrow fees if you elect to have an escrow account. If you have any questions, please leave a comment below. If you want to look at what it might look like to go and buy a house and see what your payments might look like, go visit my site, yourmortgageguybrian.com. Set up a meeting with me, no hassle, no obligation. I would love to just discuss with you what it is to be a first-time home buyer. And make sure you follow me at yourmgbrian.com.